Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. Well, from debt ceiling to tax roof, the Biden administration conceded on any of their tax push of any kind, at least through this period until 2024, which tells us a lot if we're really waking up to what just transpired this past week, right? By kind of coming together and passing the debt ceiling debate and taking concessions from the left and still some decent wins for the right, the big wins are going to come from the higher taxes that are coming. Now, let me give you an example. They talk about what's called the tax gap. Now, this is according to the Congressional Budget Office. And the tax gap is the difference between what's collected and what needs to be collected. Well, this gap has been widening for quite a while. Well, here's how wide it's expected to grow over the next 10 years. $7 trillion. And the question becomes, if you've conceded on these higher, taxing corporations higher, taxing individuals that are higher income earners higher, taxing capital gains higher, transaction tax, stock buyback penalties and tax, folks, if you're going to have that much of a widening between a tax gap of $7 trillion over the next decade, you either cut spending or you increase taxes. Well, we know they're going to increase taxes because this administration, if they've proven anything, and especially depending on the outcome, God save us all, in this next presidential run, is this administration knows how to spend. Now, here's where it gets even more frightening. It's also projected over the next decade that our national debt will increase $19 trillion. $7 trillion of just a tax gap, $19 trillion to our national debt. Folks, who's going to pay for this? Well, it's not going to come from cutting spending. It's going to come from higher taxes. Well, here's the opportunity. Go to retirementprotected.com. That's retirementprotected.com. And let me teach you what you can do to remove yourself from the tax system so you can avoid this tax roof, right? Because of the concessions provided in the debt ceiling debate in concessions, and learn what you can do to protect yourself. Because here's what this means. Right now, it's projected, and there's a lot of people quoted in this, and I'm going to make this update review very quick, because I want you to take advantage of this before it's too late. We only have about a year, maybe 2 years at best, while tax rates are low before they get increased, before the tax rates not only go up, but the deductions go down. Deductions on what I'll teach you this Tuesday, one deduction that is consistently provided a 75 to 80% deduction in the first year, which means you can Roth convert 75 to 80% of your IRA and not pay the conversion tax, but use the deduction to pay it. It's the number one thing that many of you watching this have reached out and said, man, I wish I wouldn't have waited. I didn't even know this. We've had a client that we educated their 30-year CPA, and the CPA said, I didn't know this. I've got so many clients that can benefit from this. Folks, the time to act is when the tax rates are low before they go up. This administration is going to be hell-bent on giving these concessions now to know they're coming from more tax, right, from you and I later, which means we've got to get on our guns. So it's never too early and it's never too late, right, to get a head start to be tax smart. I can't push that narrative any louder or any more clear than right now with what we just experienced with this concession that the left is given by not raising any taxes. And you've got some of the experts, and these are from both sides, saying by 2025, when the Tax Cut and Jobs Act is supposed to sunset, be prepared for significant tax increases. Significant. Well, folks, the time to act is now. While accounts are down, before they can rebound, I'll teach you also Tuesday how to stop losing. Stop losing to these crazy markets, this, that, and the other. You had China that just came out this week and talked about maybe 65 million per week could be exposed to another coronavirus strand. And you're going, that's the last thing any of us need right now in this horrible economy. It's bad enough the way things are, but now that we've had these concessions of taxes, folks, learn what you can control. Go to retirementprotected.com. That's retirementprotected.com. The time to act to control taxes is before taxes start to control us. And this administration is going to be very fired up. And some of their own constituents are frustrated with the Biden administration, their own party, that they gave all these concessions. But the joke's on, I think, those of us that don't take the wake-up call that this is just a reprieve. This is just a temporary timeout before the tax roof gets raised. Folks, you work hard for your money. Go to retirementprotected.com. That's retirementprotected.com, and learn what you can do to be a low tax or a no tax retiree. Learn how you can prevent 6, 8, 10,000 of Social Security tax, or 3, 4, 5,000 of Medicare Part B and D taxes, or these required minimum distributions. I think of the couple that reached out to us in the early 80s this last week and said, this is causing us to pay so much more significant tax, and we don't want to leave a bunch of tax to our 5 children or our 5 grandchildren. And they learned what I'll teach you this Tuesday at retirementprotected.com. Folks, you work hard for your money. Imagine, debt ceiling's one thing. Raising the tax roof is going to be a whole nother. And the time to act is while the tax rates are down, while the deductions are up, while the account values haven't rebounded, and before this higher tax roof gets raised. The time to act is now. Retirementprotected.com, retirementprotected.com.